Hi, my name is Susan McLennan. At the Directions Pre-Retirement Planning Seminars held throughout New York for executive branch state employees, many of you told us that it would be helpful to have a video from the seminar to review. We understand there is a lot of information to consider when planning your retirement, so we created this series of short videos to help guide you. Welcome to the video guide, Planning Your Successful Retirement. In this video, Paying for Your Benefits, Kevin Kreis, a Department of Civil Service Employee Benefits Division representative, will fill you in on the cost for health insurance coverage, your estimated sick leave credit, single annuitant versus dual annuitant sick leave credit, and how you pay for your coverage once you retire. Remember, these videos only provide some highlights. For additional information regarding the New York State Health Insurance Program, please refer to Chapter 10 of the online version of the Self-Help Guide to Pre-Retirement Planning, available at worklife.ny.gov, which is the WorkLife Services website. This video begins with a question from a New York State employee.
What portion of the health insurance cost will I have to pay as a retiree?
That is a good question, and the answer is retirees pay the same percentage of the health insurance premium as an active employee. New York State contributes 90% of the cost of individual coverage and 75% of the cost for dependent coverage. As an active employee, your health insurance is taken out of your check in 26 biweekly pay periods. As a retiree, you pay 12 monthly premium payments. If you have sick leave credits when you retire, they can be used to offset all or part of the cost of your health insurance premium. For most employees, a maximum of 200 days of unused sick leave is allowed to offset the cost of health insurance. 200 days of sick leave translates into 1,500 hours of sick leave for a 7.5-hour employee and 1,600 for an 8-hour employee. To estimate your sick leave credit, you would take the number of hours of your unused sick leave and multiply it by your hourly rate of pay. You can check with your payroll office for this information. This gives you the total dollar value of your unused sick leave. You would then take the total dollar value of your unused sick leave and divide it by your life expectancy in months, which is based on actuarial tables available in your general information book and on our website. This amount equals your monthly sick leave credit. If you have a monthly sick leave credit of $225 and your NISHIP coverage costs $200 per month, your insurance at this point in time is fully covered. However, the value of your sick leave over the premium is not banked for future use. Please keep in mind that the cost of health care generally goes up each year. Therefore, in the future, you may not have enough sick leave credit to cover the cost of your share of the premium. In that case, we will charge you the difference. The sick leave credit is yours as long as you are enrolled in NISHIP. Although the premiums change from year to year, the value of your sick leave credit never changes. Ask your agency health benefits administrator for assistance or use the worksheet on the New York State Department of Civil Service website to estimate your monthly sick leave credit. When you retire, your health benefits administrator will have a form for you to fill out. You can choose the single annuitant option where 100% of your sick leave credit will help to defer the cost of your health insurance during your lifetime. Or you can choose the dual annuitant option where your sick leave credit is reduced by 30%, and that sick leave credit will be available to your dependents to help defray the cost of their health insurance if you predecease them. For example, if you have a $100 monthly sick leave credit and take a 30% reduction, you and your dependents will have a $70 per month lifetime credit to use to offset the cost of health insurance. Choosing whether or not to elect this option does not affect your dependent survivor's eligibility for coverage. It only affects the cost of health insurance. Please note, if you only have one dependent on your file and you predecease that dependent, he or she would be eligible to continue the coverage as a dependent survivor at the individual premium rate. You do not need to be enrolled in family coverage at the time of retirement to choose the dual annuitant sick leave option. To take advantage of the dual annuitant sick leave option, you must submit a completed signed election form before you leave the payroll. This is a one-time, irrevocable decision. You may not change your sick leave option if your circumstances change. For instance, if your dependent predeceases you, you cannot revert back to the 100% option. Likewise, if you do not choose the dual annuitant sick leave option when you retire because you have no eligible dependents and then later on marry or assume responsibility for a dependent child, you may not change your election to the dual annuitant sick leave option. Once you establish eligibility for coverage as a retiree, you may retire with your benefits in place, or you can defer the start of your benefits provided you have other coverage available to you. You may activate your benefits at a later date. If you defer your coverage at the time you retire, the value of your sick leave credit will be higher when you reinstate your benefits because you will be older and your life expectancy will be shorter, allowing for the dollar value of your sick leave to be spread out over fewer months than would have been the case if you had not deferred your health insurance. You must prove that you have other health insurance coverage by providing your health benefits administrator with a certificate of coverage, either your own coverage or under your spouse. If your spouse or domestic partner is covered under NISHIP, provide your health benefits administrator with your spouse or domestic partner's name and social security number so the health benefits administrator can verify your coverage under your spouse or domestic partner's NISHIP enrollment file. You must also make the decision to defer your coverage before you leave the payroll. After we receive the information from your health benefits administrator regarding your retirement and sick leave credit, you will receive a Dear Retiree letter outlining the details of your health insurance benefit. We will include the option or plan under which you are enrolled, the type of coverage, either individual or family, you are enrolled with, and the cost of your coverage. If you have a monthly sick leave credit, we will let you know that as well. We'll include other information such as how you will be billed and what to do when you or a dependent becomes eligible for Medicare coverage. Your health insurance billing will default to pension deduction unless you ask us to do otherwise. Although you may begin to receive a monthly check shortly after you retire, health insurance deductions cannot be taken from an estimated check. It may take 4 to 6 months for the retirement system to allow us to take a deduction from your monthly pension check. Until the retirement system has finalized your monthly pension amount, you will be billed directly by the Employee Benefits Division. If you do not owe a balance due to the fact that your sick leave credit pays for your premium, you will not be billed. If you do owe a balance, please make sure you pay the bill until your pension deduction begins. Otherwise, your insurance may be canceled for non-payment of premium. We cannot take deductions from a TIAA-CREF annuity. Therefore, we will bill TIAA-CREF members directly for any premiums owed. If you wish to be billed directly, instead of through pension deduction, you will have to send us a signed written request. If pension deductions have already started, it may take a month or more before we can change your billing from pension deduction to direct billing. Most enrollees find it more convenient for premiums to be deducted from their pension checks.
That brings us to the end of this video segment. For more details about the New York State Health Insurance Program, we invite you to view the other health insurance videos and to visit the New York State Department of Civil Service website at cs.state.gov. Then go to the Retirees tab on the homepage. Talk with your agency Health Benefits Administrator or call to speak with a New York State Civil Service Employee Benefits Division representative. To reach the Employee Benefits Division, call 518-457-5754 if you are in the Albany area, or call 1-800-833-4344. Remember, once you retire, the Employee Benefits Division will serve as your Health Benefits Administrator. Thank you for your service to New York State and have a wonderful retirement.